And welcome to the Aaron Katzman Show. I'm your host, Aaron Katzman. We speak about your life, your money, and your investments. And as always, we're coming to you from the spiritual and soon to be financial capital of the world, Jerusalem, Israel. If you find this content interesting, please hit the like button below. If you've not yet done so, why don't you go ahead and subscribe to the YouTube channel and to the podcast? And if you think somebody might actually find this of interest, why don't you go ahead and hit the share button as well. Patience. I want to speak today about patience. You receive an inheritance, you receive a windfall. You don't have to have the money invested within 24 hours of the money hitting your account. You need to just relax, take a deep breath or many deep breaths, and figure out what it is that you actually want to do with the money. What are your goals and what are your needs? See this all the time. I have somebody recently came into a big inheritance, and the money hit. They said, "We got to start investing." I said, "No, just take a deep breath. What are your goals? What are your needs with the money?" Like, I don't know. I just don't want to. I'm missing out because I'm not investing. I said, nothing's going to happen to you if your money is not invested for a couple of weeks or even for a month or two. Nothing is going to happen, other than you're not going to make a mistake, and you're going to have to, try and fix that mistake on the go once all your money is invested. The other place you need some patience is once you get that money invested. Don't look every second and find out how come it's not going up. How come it's not going up? Why is it going down? Why is it staying the same? Why am I? Because things take a little bit of time. Okay. Especially when you inherit a lot of money, you're not going to be trading, meme stocks or whatever. You are going to put yourself into solid investments, and sometimes it'll take a little bit of time to move. But rest assured, based on historical data, you should do just fine if you're allocated correctly. But I'm going to go back. You need to know what it is you're trying to accomplish. The same thing goes through if you own like a CD or a bond in your account or in the bank and the money matures and now you have a bunch of money. What do you do with it? Well, you can take a little bit of time. You can pause and figure out, what are my goals and what are my needs? Am I young and am I sort of the growth phase, that accumulation phase of my net worth, of my wealth, where I want to be more aggressive, more growth oriented so the money can grow? Am I approaching retirement where I might need some kind of combination if I don't have enough money of some growth, but getting myself on the way to generating supplementary income that I might need when I retire and, on top of my Social Security or Bituach Leumi or pension money? All these things are important to try and figure out. What if I'm already a retiree and I'm on a fixed income? Well, that extra money that's coming in, that's a big bonus. What do I want to do with it? Do I want to help out my children? These are all kinds of questions that you need to think about. And then once you have thought about it and you have an answer, then go ahead and invest. But don't force the issue. Nothing, I want to stress this, nothing is going to happen if you don't invest the money for a couple of weeks or a couple of months. Obviously, at some point, the money has to get invested, right? If it's sitting around for a year or two, earning virtually nothing, well, that's a shame. But even then, right? Maybe you may be having to set up a certain structure for your money. You might need a trust. Things take time. It doesn't have to be invested. You can just leave the money in money market or in a bank. You can roll it over in short-term deposits, whatever it is, so you get something. But you don't have to invest the money ASAP. It's not. I've seen it too often, and people get themselves into a mess because the money is not invested the way they need it. And then all of a sudden they need a bunch of money to pay for whatever. They want to help their kid's wedding and pay off some debt and give money to charity. And now they have to break up the allocation they just created 3 weeks ago. It just doesn't make any sense. Wait, understand what's going on, and then get the money invested. I also had somebody on the flip side, somebody who inherited some money about a month ago, a month and a half ago already. And he said, I got to sit with my wife. I've got to understand, right? We've got a bunch of kids. We would like to help them some. We would like to give money to charity. And we just have to figure out how much is reasonable. And then once we do that, we'll get the money invested. And I said, that's exactly what you're supposed to do. Talk it out. Nothing's going to happen. Okay, the market goes up a little bit. So what? Okay, it doesn't make a difference. Market went down a little bit. Okay, so you got a little lucky, and you might buy it a little a smaller price, a lower price. Over the next 20 or 30 years, both of those moves are irrelevant. If it moves up a percent or two, if it goes down a percent or two, it doesn't make a difference. What's important, especially here, in the end of the day, he said, you know what? Take 60% of my money and invest it for long term. I want 10% for charity. I want a tithe, so I want to give money to charity. Okay, and 30% I want, in a short term sort of bond or CD ladder, because I've got some older kids, and they're, at some point they're going to probably, hopefully, God willing, get married, and we want to help them out. So that's what we did. Now, can you imagine if they said, yeah, well, we'll just invest all the money aggressively, and then, okay, and then in 6 months, one of the kids says, hey, we're engaged. And they come to me and say, yeah, we need a couple $100,000, whatever it is. Well, that sort of screws up the entire allocation. So don't do it. Just get everything right to begin with. Obviously, you're not locked into anything. Everything here is, generally investments are liquid unless you're buying property or whatever. Everything's liquid and you can make some changes. But it's better to know going in what you want to try to accomplish and then invest the money than invest the money and then figure out what you're trying to accomplish. It just works better. Okay. And the investments are more suited to the way that you are setting things up for based on what your goals are and what your needs are in the future. Okay, so patience. It is really a virtue, especially when it comes time to investing and in financial planning. You've been tuning into the Aaron Katzman Show. We speak to you about your life, your money, and your investments. If you like this content, why don't you hit the like button below? If you've not yet done so, please subscribe to both the YouTube channel and to the podcast. And if you think somebody might have found this of interest, why don't you go ahead and share it with them as well? Thanks so much for tuning in. We'll speak to you soon.